Good afternoon. Today is September the 17th. It's Tuesday. We have FOMC tomorrow, 2 o'clock Eastern. And so knowing that going into today, we didn't have a lot of catalysts. We had retail sales before the open, which obviously whenever you have anything significant like that before the open, low liquidity, you could see some movement. And we do our daily plan before 8 o'clock Eastern. And that's what we publish to our members, but we can change that afterwards and we'll send out a new release if we need to. But I'm saying that because the market's changed a little bit after we wrote our plan. We're positioned a little bit different at the open. So one of the locations we were watching was actually where we opened, around 57.21. But I want to talk a little bit about the overnight trade. So we talk about this a lot, and whenever the overnight market moves considerably away from the previous settlement, then if it moved higher, which we'll use that example since that's what happened today, if we move higher, then we consider inventory to be long. In this case, it was 100% long because 100% of the overnight inventory was above the previous settlement. Now, that's considered to be weaker traders. We don't have institutions and banks and large players trading the overnight for the most part. There's just not enough liquidity for them. I mean, those guys go home and have families too, I guess, but there's not enough liquidity and they can move the market. You know, some overnights will have 120,000 contracts traded versus 1.5 million in the regular session. So if you're trying to move 50,000 contracts, whenever it only trades 120,000 within a 13-hour period, you're going to move the market. But in this case, we were watching overnight inventory. It was long. So we're looking for some sign of correction at the open. That gives us an idea. We'd like to see the overnight inventory correct so we can get an indication our buyer's going to step in on this. You know, how strong is the correction? When you get to certain points where you know that the overnight trade is wrong, are we going to stop them out? Do we just see them hold their ground? So it's not something when we say we're going to watch for inventory correction at the open, doesn't mean that first minute or 5 minutes, but starting at the open, we're going to watch for overnight inventory correction. It may take 5 minutes, 22 hours, it's different. But yesterday, we were in a 2-day balance. So we stayed within the balance of the previous session. And that's a 10-day, I believe, about a 10-day balance from before. So we have a lot of trade in this area. This upper balance has become a pretty critical area. So we were in balance yesterday, and then all of a sudden we move up. You know, pretty firm market overnight on no clear catalyst. It just looks like a carry-on trade from overnight markets, global markets. And so it's a little suspicious. And we're in short-term uptrend. Market is bullish short-term, so we can look for continuation of that. That would be smart to keep that on the radar. But we're also in balance the last 2 days with a major release tomorrow, so we can look for continuation of balance as well. And so I'm going to bring in the newsletter from the day, so we can kind of talk about what we said. You know, today, as far as our news, we had retail sales. As I said before the open, these are Central Time, so 8:30 Eastern. Then we had Red Book, some other industrial production numbers, etc. And then inventories. So there wasn't a ton of major catalysts, especially considering FOMC will be a much bigger catalyst tomorrow. And on our scenarios, we just talked again about what I just mentioned about the overnight inventory. So scenario one, we're looking for a break from balance. 57.02 is a previous high day. That was this balance high, where we'll be looking for buyers to step in. We saw a pretty clear break in the overnight session showing that that's a level of interest. You know, put in double distribution. Sellers, you know, didn't retest that level in the overnight. So that's a confirmation of that level being something to watch going forward. Target the overnight high of 57.21. That was the existing overnight high, which is right around this level here. It's actually right around the open. So it took that off of the price map since we opened there. But that's what we were looking for when we wrote these scenarios. That is a target for this scenario. We didn't expect a lot more. That's why we said that. We will monitor for continuation. So, you know, we were trading higher. We couldn't really find much selling. So at that point, it's monitoring for correction of the overnight high, for a break of the overnight high and continuation above, which we did get a little bit. We got up to this gap level. Bring in these levels. So here's the 21. We actually already had a level there where we had the existing overnight high whenever we wrote this newsletter. And then this ended up being the overnight high at the open. We traded above that all the way up to this gap fill and broke into that just a little bit. Then on scenario 2, the trade back into balance. So failure to hold above the previous high day could see some additional liquidation of weak longs. 56.90 is the first target, which was hit. Additional will target yesterday's low of 56.69, which we didn't quite get there. A second entry on this scenario is the overnight high, 57.21. This did work out. We want to see the market fail to hold above, as we're likely to see strength above that could squeeze short stops. So what we're talking about there is that we don't want to try to enter at that level, which sometimes we will. But in this scenario, we're looking for squeezing of those shorts at that level. So we don't want to get in at that level. We want to look for failure to hold above that level and then trade lower. And we ended up getting some good liquidation, fell right back into balance. And we cannot get back out of this balance area for the rest of the session. Not really surprised that we stayed in this range going into FOMC. Talk a little bit about FOMC. You know, there's all kinds of confusion, indecision around what the rate cut number is going to be, which there's been a lot of change. Even today, there was some change on those bets. Some people are looking for 25 basis points, some people looking for 50, and then even, you know, analysts and people are suggesting that the Fed should cut 75 basis points. And you know, this isn't the point of this podcast to discuss this. I actually did a thread on X about that. So I'll drop the link in the description of this. But you know, regardless of what happens, the main thing I want to highlight on that is that there is a lot of indecision. So you're not likely to have that there's 80%, 90% probability, which there is a lot of times, 95% probability that we're going to get a 25 basis point cut, and then we do, then most of the market will probably be positioned for that. But since we have almost half the market expecting one thing and the other half expecting another thing, and that changing dynamically as we go into FOMC, then that might bring in a lot of volatility and some liquidation. We could see some huge swings on the decision. And then, very importantly, you know, Powell speaking afterwards. The book will be very thin after the decision. I don't trade that, except for sometimes scalping every once in a while, but that's not what we're talking about. Until Powell comes in, he'll have his press conference, he'll answer questions, and then everything will start to die out after that. You know, a lot of times the moves already happen at that point, but the market will move so fast that it'll be very difficult to manage risk in that environment. So there's nothing wrong with not even showing up tomorrow and just looking at the news afterwards. We're just watching the market to get a feel for it, but not putting any trades on. So there's a likelihood that I won't take any trades tomorrow. We'll see what happens and how it plays out. But as far as our members go, you know, we're going to be trading live in the room, obviously, but we're going to put out a newsletter in the morning, as always, with scenarios for the day. And then after FOMC, we might, you know, it's late in the day, excuse me. It's late in the day, but we might publish something else on X or even send another newsletter if there's enough to be said about it. But we'll just kind of take that and trade it as it goes. But that's the majority of what I want to talk about in the newsletter today. As far as the top bets, open, the ticker open. There's some open interest, September open interest, but the buying certainly aggressive enough here to create some momentum. Seeing bullish wise guy activity detected in IP. And that's it. There's just not a whole lot of stuff going into this announcement tomorrow. Does a great job pointing out what there is, but it's a good indication that we're just not seeing a lot of stuff that Jay's crazy about there. So hope everyone had a good day trading, and you know, be careful tomorrow. Nothing wrong with letting the trades come to you. You know, we may move 100 points, may move 150 points tomorrow, either direction. There's no telling. But we will see you guys in the morning.